Speaking of risky, one other thing too to talk about is IPOs have kind of come back into fashion, I'm going to say, this year. So far in 2025, there have been over 150 IPOs, which stands for initial public offerings. These IPOs have raised about $29 billion so far this year, and it's a nice increase in the total number of IPOs when compared to recent years. At this time last year, just 99 IPOs had occurred, and in 2023, it was even worse at 76. So we are getting this, again, IPO, I'm not going to call it a boom, but increase compared to recent years.
So we're seeing a lot of those. And I mean, I think with IPOs, there's always some excitement or some optimism around them. And I mean, sometimes I would say it works out for a very small number of people, but there's just so much risk. And early on, when they finally, get listed, they are so volatile in those first couple minutes, even.
Yeah, I mean, if you look at just the excitement around it, kind of to your point, I mean, the first day gains are averaging 26%, which is the best since 2020, and that sounds exciting. And I mean, if you look at some of the hot ones like Circle, Figma, Bullish was another one. I mean, there's several others, but there's been some that have closed up 82 to this number blew me away, 735% on their first day from their initial offering price.
Do you know which one that was?
I'm not sure which one it was. 735. We're going to talk more about Newsmax. It was potentially Newsmax.
I know that is one that we're going to talk about.
Yeah, so we'll kind of hit the numbers on that. But I mean, there's been a few that have been, pretty jaw-dropping in terms of the gains that you see, but others have not done so well. I mean, StubHub, there was excitement around that. Its current price around $17. The IPO is $23.50. It opened around $25.35 and then peaked at $27.89. So really, since that first day on IPO, you saw a high of $27.89, now down to $17. I love this one. Gemini Space Station. That's a fun name. It's a crypto firm led by Cameron and Tyler Winklevoss. That's now around $24 a share. Its IPO is $28, opening price $37.01, and the high within minutes of trading went up to $45.89. So there's probably somebody out there that was super excited about it. They bought it at $45.89 and now have seen that cut, I'm going to say almost half.
And I mean, that's the thing to keep in mind too, because the IPO price is not the first price you can buy when it actually gets listed. So in that case, the IPO was 28, but if you were the very first person to be buying, you were buying at 37.
Yeah, and it's something that you just get hit with, and it's like, oh my gosh. And, kind of circle back to the risk in the market. I mean, one thing that has just blown me away is, we talk about Gemini Space Station. That one hasn't worked out, but then there was this other crypto exchange called Bullish that went public. I think there was another crypto exchange that's also gone public this year. You have Coinbase, you have this crypto. Why do we have so many crypto exchanges? There's there's so many out there, and you're like, what the heck is the purpose of having so many different crypto exchanges? I thought the benefit of cryptocurrency was to hold this thing that the government couldn't track, but
they're tracking it. Let me tell you, they are tracking that thing. You get a 1099 when you sell, you got a capital gain, report that. Yeah, they're tracking it.
It's just something that I looked at that saying, gosh, I mean, this was it again, Gemini Space Station. I think its market cap's like over $2 billion.
Yeah, it's like $2.5 billion or something like that.
No way.
Which I mean, when you look at like the Cameron and Tyler Winklevoss, they don't care at the end of the day because they created this company, or started something and put a name on it, and IPO'd, and so they get cashed out of whatever stock that they put in the IPO. So they're happy. Is now they created this thing. Who knows what its actual value is, but they got, I don't know, $1 billion. So that's good for them.
Their net worth looks pretty nice right now. But I mean, kind of to your point too around volatility, I mean, one of the big reasons there is so volatility around the IPO market is many times these companies, they're only releasing around 15 to 20% of their equity. And then you also have to take into consideration, there's often a initial lockup period of around 180 days. So, many of these prominent people that are in these IPOs can't even trade within the first 180 days. So this really reduces the float or the number of shares that can trade, and it really has this big distortion on what is going on with the price of that stock. That is something you have to keep in mind because it's just something I will never get involved in the IPO trading because it's such a small subset of the shares trading. You're not getting, I think, a true valuation of that company.
You're definitely not. And the investment banks that sponsor these things are trying to get as close of a price they can to what its actual value is. But initially, like you said, if only a very small portion of that is actually being traded, depending on who's buying and then who's actually, buying and then trying to trade those positions, there can be so much volatility, and you win and you lose, but it's really more of a gamble.
Yeah. I mean, it's a huge gamble. It's a gambling chip at that point rather than a long-term investment in many cases. Now, if you got in at the IPO price, maybe it's a long-term investment. But if you're getting in on the first open trade, I think that is where you can. I would never do an IPO, just to be clear. But
and I wouldn't think of it as a long-term investment. I mean, anything where you lose money quickly, you could look at, oh, well, it's a long-term investment. It's all right. So true.
And I mean, the thing you have to realize too is, again, that investment bank, the reason that they need or want to, I should say, try and get the best price at that IPO level is because that is then money that the company can now actually use. If you go IPO, you raise $450 million, let's say, and now that IPO price is 24. Well, let's say if it was first trade comes out at 40, well, you left that money on the table that company could have actually utilized for the business. So that's why many times these investment banks, they need to try and get the best price possible, as that is capital that the business can try and then implement, which is to me why when something goes public and it trades way above the IPO price, it's like, why would you be buying that?
Right. Right. Yeah, exactly. Sense. I mean, they are incentivized to get as high of a price as possible, which as a buyer of an IPO, you're like, okay, I'm already taking that high price and I'm going to buy it because I think it's going to go even higher, which the only time that really happens is if there's a lot of other people that are hopefully doing the same thing and they're buying it and pushing the price up.
Yeah, exactly. I mean, you kind of talk about pushing the price up. I said we talk about Newsmax, and this one just blew me away. You know, it's a conservative kind of news outlet, but they went public issuing the IPO price was around $10 a share. I think it was exactly $10 a share. Mm-hmm. It very quickly went to $265. At one point, I think it was like, this thing is almost worth as much as Fox News. Today, it's around $13 a share. Now, again, you got the IPO. You're still up 30%, not too bad. But there's somebody out there that paid $265 a share. And if they didn't trade it, well, actually, they definitely didn't make money since that's the all-time high. Mm-hmm. But if they're still holding it, you're sitting at a very, very substantial loss. And that's what can happen in these IPOs is they are crazy. There's so much risk involved. That's why I just recommend don't do it. The way that I think you can benefit from IPOs, look at these investment banks, right? You look at Goldman Sachs, look at JP Morgan Chase. They're the ones that are benefiting from, I'm going to say, the excitement around IPOs because then more companies go public. Mm-hmm. Now that gives them a larger kind of pool of clients. They should have nice profits, I think, at least for the next few quarters, mm-hmm. maybe the next year or so of clients coming public. That should be nice profits for those businesses.
Yeah, that's definitely, I think, a good way of looking at it. Yeah,
you're not going to make 100% on Goldman Sachs or JP Morgan Chase.
You don't need to. Yeah. You don't need to, and that's the thing. The only time you can make 100% or make that much money is if you're taking a gamble, which means you also have the ability to lose that amount of money in that period of time.
Exactly. I mean, kind of speaking about that going public, I mean, there are some potential firms going public here within the next year. It's Wealthfront, the robo-advisor. Here's another crypto company, Grayscale Investments. I don't understand why anybody buys their Bitcoin ETF because it is way more expensive than the other ones. You also have Stripe. I've actually used them before. They're pretty good fintech. And then sports apparel and betting company Fanatics. There's also other major private companies like OpenAI and SpaceX that have obviously not gone public yet. It'll be very interesting to see if they do go public within the next, I don't think it'll be next year, but maybe next 5 years. At some point, they have plenty of private money keeping them mm-hmm. With the ability to raise capital. But at some point, those people that are early investors want an exit.
Right.
And that's why you go public many times is to provide that exit. Mm-hmm. So again, IPO market, very interesting.